Hi folks, David Waring here again with InformedTrades.com. Just a quick video update for the Marketclub Trading Diary to let everyone know that I've just placed a trade short in the euro dollar at 126.45 using the Marketclub Trade Triangle Technology, and I'm going to outline my analysis here in the slides to follow. For anyone who's not familiar with Marketclub or would like to learn more about what I'm doing here, I've included some links below this video on Informed Trades where you can do so. So let's get started.
Okay, so I received a red trade triangle email alert today around 1:30. I've got the Marketclub software set up so that anytime a new trade triangle is issued for any of the instruments that I'm following, I get an email alert on that. And I actually didn't have a chance to check the charts until a little later that afternoon, or later this afternoon. But when I did, I ran through the analysis technique that or the filtering technique that they recommend, which is to start with the weekly. And as you can see here, there is a red trade triangle there at 138.81, issued on the 2nd of October. Then I checked the daily, and you can see the trade triangle that I was emailed about, which was issued today on the 3rd of November at 126.65. And then checking the Smartscan score, it's -90, which indicates a strong downtrend, and my 4th and 5th arrows there, as outlined in the introduction video I did, which is one of our sell criterias, is red there. So we're good to go from that standpoint. Next thing I did was pull up the monthly chart. And it looked like there's some support here that could potentially come into the market on the monthly at 120. So that seemed like a reasonable target for this trade if it continues to run in the direction of the trend. And then it seems like there should be some resistance at 129. So that's the area that I would like to get my stop above. For the risk reward here, I decided to go with a straight 2-to-1, which puts my stop at 129.67 and gives me a little breathing room over that 129 area with the target of 120, which gives me 2-to-1, and that's 322 pips. And if you remember from my last video post, we said we're going to start with $30,000 in paper money. And we lost 450 on the first trade, which leaves us with 29,550. And I'm going to risk 1.5% of that on this trade, which gives me $449. And if I divide the 322 pip risk into that $449, it gives me a contract size of 13,000 euros against the dollar, and that's rounded down to the nearest 1,000. Okay, so I'm going to go ahead and post this one on the blog, and I'm also going to write all these trades down on a sheet and publish those in the diary as well, so you can follow along and look at the past history of the trades and everything there. Okay, so as always, if there's any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.